You're listening to Crazy Shit in Real Estate. You'll be amazed at all these wild but true situations that others have found themselves in. Because on this show, you'll hear uncensored, unbelievable stories from the world of real estate. I'm Leigh Brown. Let's dive right in.
I'm Leigh Brown. This is Crazy Shit in Real Estate. Today we're going to talk about money, and don't run away because you're going to need this dose of truth and encouragement from Matt Bell, lender extraordinaire out of the DFW area. So enjoy the conversation, get your pen and paper ready, and I'll see you on the other side. Good morning, Matt Bell. How are you?
Hi, Leigh Brown. How are you?
Oh, I am fantastic. Let me find my Matt Bell notes and see if there was something special I was supposed to know about you. Let's see. I'm running behind today. Oh, well, let's see. Oh, you wanted to talk about borrow better, live better. I love that, especially since right now in real estate, everybody seems to think that Jerome Powell is a great being, which he's, I think, of the devil. And all these people that think 50 basis points is going to take us back down to 3% fixed is making my head hurt. And I'm going to just poke my pen through people's eye, which I know is not productive. So hopefully you can even talk about the current state of how basis points work. And anyway, to the show, Matt Bell.
Just jump right in. Well, first of all, thanks for having me. I follow you. I love your humor. I'm from the South, and so I love Southern. Just this is what we are. This is how we talk. This is how we are. And
that's a Texas phone number. You in the Metroplex area?
Yeah, DFW.
Where do you live in that area?
Grapevine, South Lake area.
I used to live in Grapevine.
Get out of town.
I mean, it's 30 years ago, but I live right there, one street off of where the True Value used to be on the old Main Street before, way before Grapevine Mills and before it blew up.
How funny. I love Grapevine. So Grapevine, South Lake, Colleyville, I call that like the quiet area of DFW. I don't know if you know this, but South Lake is like the most wealthy zip code in all of DFW.
I've heard that.
Like Highland Park, Park Cities, all that area would be that way, but South Lake is by far.
Well, I dated a guy in Highland Park, and he acted like it was the wealthiest place on the planet, so that's not that long.
Yeah, love Grapevine, love South Lake. It's everything I want. Small town feel, but big enough amenities to make it feel big.
I don't know. Garland's pretty cool if you go to the east side of the DFW area.
Yeah, I like Garland. Did you say Garland?
Uh-huh.
Yeah, I like Garland.
It's a good rodeo over there.
Yeah, Garland Mesquite. That's one of the few affordable areas that's still left in DFW. But
that's fun information. Okay, so I'm going to go to rabbit hole 14 ways to Sunday today because there's so much happening in real estate and in mortgage world in specific. Mm-hmm. How long have you been doing mortgages and lending?
21 years.
Oh, so your mortgage business can drink officially. That's probably handy right now.
It's very handy. And I'd say the first 12 years of that 21 years I was serving the Raleigh-Durham market specifically and solely. This is literally, let's call it 06 to September of 08. I would fly, to Raleigh-Durham literally every week. I had an apartment there, and I was serving KB Homes out of
I remember them. Yeah.
Out of Cary, North Carolina, and all my clients, all my realtors, all my builder communities were in Cary. Oh my gosh, I loved Raleigh-Durham. It's about as close to DFW, like Charlotte, DFW, all feel the same way. Mm-hmm. And so I love Raleigh-Durham. And then literally moved back to Dallas August 20th of 08. And then we all know what happened a month later with Lehman Brothers.
So you moved and changed markets. Pretty fortuitous time, though, because KB hit some pretty troubled waters as the recession hit.
Yeah, they went through a rough patch, and I think builders the last 4 years have really been the bright spot. And there's a whole reason for that. But I think the state of lending, the state of borrowing, the state of real estate, the last 3 years, it's been weird. And by weird, what I mean is, as you know this, as a lender, you're like the surgeon. You get a behind the scenes view of everything. You get to see what nobody else gets to see when you're talking with clients, whether they're super wealthy clients or not so wealthy clients. And the last 4 years, let's call it, late 21, when inflation started to really bite, rates started to go up rather quickly. I just started to see people making home buying decisions still around this little thing called a percentage rate. And the more I peeled back the layer in the curtain of decision making, psychology, why do I buy now versus why do I buy later or not? And I just started to see clients make decisions on real estate on a stinking percentage rate. And I'm like, and so I started to ask more questions about clients. Like, hey, do you know, like, why are you wanting to buy now when the rate's 6.2 and you didn't want to buy at 6.8? Like, tell me about that. And so I started to, I do about, let's call it 200 client consultations, every 2 weeks. And the theme is the same. I make decisions about real estate based on literally small percentage basis points. And I can't really figure out why. And I think it's a feeling, it's a sentiment. Nobody really makes decisions around math anymore. Which, it seems silly to say such a thing, but it's true. And so the borrow better, live better mentality, the mission statement that we live by, is we want to just get rid of that silly way of real estate decision making and really put people back in the driver's seat of, hey, so you're waiting for rates to hit 3%. Okay, I get it. You borrow a $500,000 home, 3% is going to cost you $323,000 in interest over 30 years. Does that seem like a small number to you, Mr. and Mrs. Smith? Oh, well, no. Okay, well, that's what 3% will get you. So if you're waiting for that, like you're just waiting for the decision making, the way you ask questions around real estate just seems to be wrong, is maybe what I'm trying to get at.
I mean, I love that so much because you see it as much as I do on Instagram and TikTok. We have less seasoned, is the nicest way I can put it, agents and lenders out there talking about marry the house, date the rate. And then they make all these promises about, oh, just buy it now, refi later.
Yep.
Failing to understand the historic nature of interest rates, what the overall cost of the interest is over the life of the loan, how they can pay it down in a timely manner, and of course, how they can manage that monthly payment. And the messaging is just, it misses the mark on how people live. And I love that you're looking at this from a deeper perspective. But the only thing you said that's wrong is you said all lenders are surgeons who get to look behind the scenes. And I don't think that's true. I think you are one of a rare breed who look at the whole picture and then provide some counsel. I think there's too many lenders in the market who say, fill out my online app. Yeah, if you're approved for this much money on a 30-year fixed, and they don't even talk about the different loan types that are out there, the implications of the payment and the long-term cost of it. So I hope you're going to give us now some questions that a consumer could ask to find a Matt Bell. What should they be looking for as they determine who's going to help them navigate the financial responsibility of real estate?
Yeah, here's what I see most, and by most, let's say 70% of the American home buying populace. Oh, I like that house. Is it in the area that I like? Okay, check one. Okay. Does the rate that I'm getting, can I afford that monthly payment and not die every single month? That's how we make buying decisions in general. Can I put my kiddo in this private school? Can I get that auto loan? Can I get this house? Can I put X amount aside every month? And if I can answer yes to all those questions, I've been considered successful. And then people do that monthly mentality. I call it living by the monthly mentality of the payment. And then we rinse and repeat that for 6 months. And then before you know it, 10 years later, we've lived through the same 6-month cycles. And we're 55 years old and we literally have 200,000 set aside for retirement. And now we're making another home buying decision at 55 years old. And now we think we're going to have a mortgage for 20 more years, 30 more years. And I think the American people would be shocked at how many people make decisions in that same vein. So what I tell my homeowners when we do a consult is, if you're coming to me, just give me the pre-approval, give me the best rate. I'll call you when I have an offer to submit. Yeah, we do that. We do that well with little fanfare. We're almost serving like a fiduciary. Like, I'll give you an example. I met with a client in Houston last week, sweet 52-year-old single mom. Kids are teenagers. She's in a great position, but she's 52. She's about to buy a new house in Houston. And she's like, I had prepared to have this mortgage for 30 years until I'm 80. I'm like, and I have to obviously turn the shock down a little bit. And so I said, her name's Nicole. I said, Nicole, Has anybody ever sit down and done like just a deep dive in your finances? She said, no. I said, well, can I have carte blanche to talk to you frankly? And so long story short, we went through her debt. We went through her housing picture. We went through her assets. And I said, how would you like to walk into your 60s free and clear and literally have $3 million set aside in retirement? She's like, okay, that sounds great. How are we going to do that? So I went through a consult and I said, okay, here's exactly what you're doing wrong. Here's what to do right. You need to not go into your 60s with a mortgage. There's nothing more restrictive to a retirement planning session than thinking you're going to have a $3,000 a month mortgage payment until you're 75. And even my Merrill Lynch financial advisors that I serve pretty religiously don't even think about that. Like they're just going to have a mortgage. That's just the cost of doing business in America today. And so fast forward to Nicole's solution, I said, okay, you literally don't put anything aside for savings. You have no savings account. If you need liquid cash immediately, you're taking out 401k loans. You're spending $4,000 a month on auto loans, consumer loans, still paying out student loans at 52. So I told her, I said, does your 401k company let you withdraw for the down payment? Most 401k companies let you withdraw penalty free for the down payment. I said, here's what we're going to do. I want you to, in the process of taking your 5% down out of your Vanguard 401k, I would recommend, again, this is my recommendation, I want you to take out $123,000 out of your $300,000 401k, and I want you to pay off literally every piece of debt that you have. That's going to save you $4,000 a month. My mortgage proposal to you is $1,700 a month, taxes, insurance included. Now that you're not spending $4,000 a month in debt, now you can maximize your 401k, your after 50 contribution catch-ups. And I said, so literally in 9 years, when you're, let's call it 60, you're going to have a free and clear house because the money you're not putting towards debt, consumer, silly, stupid debt, is now going to be able to go towards your mortgage. You're going to maximize your contributions on 401k. You're literally going to walk into your 62, 10 years from now, with a free and clear house, $250,000 set aside in just liquid savings in your Chase account. If you contribute the max on your 401k and your income stays at the same level, you're going to have probably 2.2 million. She's like, nobody ever showed me that. All because of how you rethink the mortgage side. She's like, you literally changed my life. And that's the mentality of you've got to rethink this whole mortgage process with different lenses.
Well, that's also why I think there has to be a more honest conversation about what you're describing, which is, in a common way called debt slavery. If you are accustomed to having a $4,000 burden every single month, you're a slave to that debt, and it's hard to ever pay it off because when interest rates balloon, which we've now seen on credit card debt, interest rates are, it's biblically usury. It's so high right now. The minimum monthly payment is hard enough for people to keep up with, much less get beyond it because their wages haven't kept up with inflation. There's all these other factors going on. It's a different way to look at it. So how do you also get a person like Nicole to understand they don't want to repeat that cycle? How do you not build the credit debt back up again? How do you stop the Amazon Prime problem, which I have called out as many times as I can? If you know your credit card number by heart, that's part of your problem.
That's so true.
You can buy without thinking. Then the boxes show up, and you're thinking, I'm not really sure what's in the box today, and so you get surprised every time, and that just leads to continual mounting consumer debt for things we don't even need. And how do you advise people past that, Matt? Because I can already see the comments are going to come in of, sounds good for Nicole, it won't apply to me. I'm too far gone. I can't get out of debt. There's going to be a lot of negative self-talk. But in addition, if somebody says I could, but then what? What's the then what answer?
I think the way that we purchase in America, obviously, every single day you sit down at your computer, you're driving on your phone, you're literally walking through an outdoor shopping center, you're hit with about 3,000 marketing messages a day. And so you're constantly having to exercise, even with food and drink and shopping, you're exercising willpower on a microsecond every single day.
Exhausting.
And it is exhausting. And so I've had to really train, and obviously there are clients who will say, oh yeah, I know all that. I'm like, you do, because you have $96,000 in credit card debt. So knowing and doing are very different things. Like when you watch Dave Ramsey, he's like, I'm not teaching you anything you don't already know. I'm teaching you how to think through behaviors. And so the way people behave is they think, oh, this one thing is going to make me happy. Oh, that house in that location is going to make me happy. Okay. How has that worked out for you? It hasn't worked out well. And so like with Nicole, it's literally a retraining and a paradigm shift in how you think through the satisfaction that things give you. So because I want my clients to have a 20-year look forward period in their mentality, what could you do at 65 years old with $3 million in liquidity and no debt? Like you literally now have the ability to legacy plan, to be generous with kids and grandkids. Now you can go literally move where your kids and grandkids are living. You can go on a cruise. I mean, all because you made the right decisions today. And I just think people have let the daily grind, the daily self-control requirements so weigh down on them that they can't even see past the nose on their face. And they can't even dream that, oh my gosh, I could be free and clear on this debt in 9 years. I had a consult with a client yesterday. And I'm like, and I said, let's examine your lifestyle. You can literally be mortgage free in 2.6 years just because of your current income and your current lifestyle. She's like, why would I want to do that? I'm like, why would you not want to do that? And so it just takes people thinking past tomorrow, past 6 months from now. And I think it takes somebody speaking hope into that mental equation. We live in a day where you wake up to your news and it's just all bad news and inflation and interest rates. And I'm like, you have more control over your life and your feelings and your finances than you even remotely know about. And I'm going to show you how to take back control. And that's how we go through the Borrow Better system.
So I was taking a note here about when you were talking about 3,000 marketing messages a day, because my brain gets frozen on things that jolt me. And the idea of being exhausted by those micro decisions means you think this isn't available to you when it is, but then you talk to an expert, and you already mentioned a few minutes ago your Merrill Lynch guy who's operating on the assumption that the mortgage will always be there. And I'm thinking about our parents. They assumed that they would pay off the house and then just stay in it. And all you'd have to deal with would be insurance and property taxes, if that. Now we make the assumption that you're always going to be moving up. And then I think about our 55 plus neighborhoods, which are beautifully done. The fit and finish is gorgeous, and it comes with the activities director and the amenities. But somebody sells their family home, and they're not all cash purchases over there. So now you're buying into a retirement community where you assume you're going to have this debt until you die. But when you say there's another way,
yeah,
I feel like that's possible for everybody. So let me ask you a question that came in over my text. And let me just see what your advice would be to this lady, because this broke my heart. She said, I want to buy a home for the first time so badly at the age of 41, but it doesn't seem worth it anymore. And that makes me so sad. From a mortgage perspective and the desire to be debt-free and the desire to have the financial freedom, what would you say to a 41-year-old first-time buyer who's lost hope?
The average age now of the first-time home buyer is like 37 years old.
So she's not that far behind.
She's not. The average age of a first-time home buyer 12 years ago was like 33. So as that average age creeps up, either because of affordability concerns or constraints, we're seeing more people in their 40s make their first-time home buying decisions. And what most people don't even realize is the median age of most buyers today, whether they be first time or repeat, the median age of current mortgage related transactions is like 51 years old. So combination of first time and second or third time buyers. My advice to her would be sit down and look at what you earn. The majority of our power as Americans is related in our income and our cash flow. If you're looking at a $400,000 house, the average price in DFW, for example, is about $423 on average. If you look at a $423,000 house and then you look at your income, most people, not all, but most people run enough income through their daily and yearly banking habits in 5 years to pay off their mortgage. Most people. And that's just statistics.
Except that we're sieves because we're not paying attention to it.
Exactly. This is just the cost of doing business. there's no possible way that I could pay my house off in 5 years. And if I were to, I would have to say no to all of these other awesome things that I love. And so what I do is I'll sit down with a client like that that's 41 years old, and I say, let's look at your debt. Let's look at your retirement. If you've got any retirement, let's look at your savings habits. Let's look at the area you want to buy in, and let's craft a plan to where when you go into your 50s, because really from 41 to 65, those are your formidable income earning years. And I think if you put together a plan, you can really envision being mortgage free in anywhere from, let's call it 5 to 10 years. So you're 51. Now from 51 to 65, imagine having no mortgage hanging over your head. Imagine now every dollar you earn going to just savings and retirement planning. And when people see that light go on, they'd be like, oh my gosh, so I can do this. Yeah, it might make, some requirements of me to change my decision making now. But for people like that are 41, all they hear is rates are high, prices are high. Wall Street Journal headlines say that affordability is at the worst it's ever been in 200 years. And that's just what they think. And then when I sit down and show them an amortization calculator or a different mortgage product that we have, it just totally upends. Like it's almost like we've been taught wrong since the 1930s, because that's how long amortized mortgages have been around since FDR. The 30-year fix has been around since 1932. And
the propaganda machine doesn't want people to have positive outlooks and be encouraged. The propaganda machine makes a living off of negative news, negative clicks, which is what you're talking about with the national real estate picture, which is just not relevant in so many parts of the country. Because even your 423, which you're cracking me up with, it's about 423. That's hilarious. Whereas on the real estate side, to be like, 400, 500, whatever. But being a numbers guy, it's about 423. Anyway, you have that 423 average. You can still move 30 minutes outside of the main drag and you will find a different value corridor. We see that all over the place, but even inside our more expensive markets, there's duplexes, triplexes, quads. There's different ways to look at the calculus if you have the right person giving you some counsel. So let me ask you this question. At what point do you talk to that 41-year-old first-time buyer and help them draw the parallel between what they're paying in rent and how the mortgage works differently? Because I do think that's part of the miseducation of our young people now, because they're so accustomed to renting. And the hedge funds are building beautiful apartments with granite and floor-to-ceiling glass and hardwoods and a doorman and a pool on the rooftop, and it feels really good. So we have to overcome what feels good with math, which is a hard comparison to draw. What's your advice on that?
Yeah. So when I sit down and do a consult with, let's say, a 25, 26-year-old, out of college, has student loans, doesn't want to live the urban apartment life forever. They want to have some, let's call it single family ownership power put back in their hands. We'll sit down and look at a 2-bedroom, 2-bath apartment, $2,000 a month, and here in Dallas, Fort Worth. And I'll say, okay, so at $2,000 a month, that's probably going to put you with taxes and insurance at maybe like a $270 purchase price. Well, I can't find anything for $270. I'm like, you won't find, a brand new, gorgeous HD TV worthy home. But what if you found a $220,000 house and did a renovation on it with a renovation loan? Then make it what you really want. Oh, you can do that? Yeah, you can literally borrow the renovation as part of your purchase. Yeah, you might have to wait 3 months, 4 months to move in, but at least it's really gorgeous and it's yours. You did it, and it's in a location that you want. And so now you're spending $2,200 a month towards something that you own. In 7 years, based on what you earn, if you're mortgage free and that house is worth $400,000 in 7 years, now if you sell and move because of family or household formation decisions, now you're walking into $100,000 of cash and equity. Now what can you do with the $100,000 down on your next house? So I think what's so cool about the American home buying system and the American credit system is it's unlike any other place in the world. We literally can borrow 95, 96, 97, 100% to purchase an asset that not only appreciates in value, but we can create even more wealth by paying down that debt. And then that sets us up for so many financial decisions down the road, to where when you get to be 65 and you want to go move into a 55-year-old community, affordability gets to be harder as you get older. I mean, by prices. let's do a reverse mortgage when you're 65 and you'll never have a mortgage payment again. Sweet couple came to me about a month ago. Grandkids live about 2 hours away. They haven't had a mortgage for 15 years and they're 75 years old. And like, we want to go live within 10 minutes of the grandkids. I have 6 grandkids. And I'm like, okay, so house is worth 500. You can sell for 500. Where you want to live is 700. Okay. Well, we don't want to have a mortgage. I'm like, well, just sell what you have for 500, put 500,000 or 450 down on your $700,000 purchase and do a reverse mortgage and you'll never have a payment again. And like their eyes just explode. Reverse mortgages are horrible. You guys are leeches. I'm like, have you ever talked about a reverse mortgage? And so people just have these wrong assumptions. And I'm like, it's just really fulfilling to see the light bulb go on. And so now this older, sweet couple is now able to move towards grandkids and still enjoy the mortgage-free life that they've had.
I mean, reverse mortgages have taken an enormous amount of negative press from a few bad actors who did not present it correctly to some people. But I think you could say that about anything in life. You have poor headlines, poor motives lead to negative outcomes, when the reverse mortgage is so helpful for people who have spent their lifetime paying off a house and they just don't have liquid equity. Can you give our audience a good place to get some information on reverse mortgages if they want to get educated on them and look into it for parents or grandparents?
Yeah, my YouTube channel, we've got reverse mortgage videos up. So if you go to YouTube /the @ Borrow Better is our channel. We've got product related, instructional videos walking you through, here's the common misconceptions about reverse. Here's the truth. It's the most regulated of the regulated mortgage transactions. It's the most consumer friendly of the consumer friendly transactions. So I spend most of my time just tearing down misconceptions about whatever product it might be. And so, like, for example, like when I'm reading with a 41-year-old, I tell that client, my goal is to have you walk into your 60s without a mortgage. And then when you turn 62, we're going to slap a reverse mortgage line of credit on your house. It's free and clear. And now you're going to have a tax-free income source for the next 20, 25 years, all because of the hard work you did from your 40s and 50s being mortgage free. That's literally our system. Accelerate debt payoff, mortgage payoff, entering into your 60s, mortgage free. Your life is completely different. It's just, it's entirely different when you enter into your retirement years without debt.
I love that you keep circling back to how different life is when you are not saddled with this debt. And if you guys are wondering why we're repeating this over and over, think about when you're 18 years old and you go to college. The first week you're there, you are inundated with credit card offers. And so our young people, from the minute they are of the age of majority, are put into the debt cycle, which is why most people never see a way out of it. And once you start to see a way out, you can experience things in a different way, because a lot of that stress that you're under comes off and you can really focus on the things that matter in life, which are hopefully not things you buy on Amazon. So, Matt, what states are you licensed in if somebody wants to reach out to you for one of these consultations?
We do all states. So CMG Home Loans is licensed in all states. And I purposefully, back in my old Merrill Lynch days, I used to work at Bank of America, and we obviously had national coverage, and that was always a very big, important piece of what I did. So,
I was at Prudential Securities when I worked on Wall Street, so I was your competitor. Thank you very much. Before they got bought by Wachovia, which has been gone for so long now. Now I've shown my age, but anyway, here we are. Matt, if people want to find you, they can find you on YouTube. Where's the best place for them to find you? Is it your website, email, social media? Best way to find Matt Bill?
Website, borrowbetter.money.
There you go, friends. I'll include that in the show notes for this episode in the event that you were sitting there with your mind blown by the idea that with a little focus and education, you can live a little differently. And especially as the economy hits some rocky places, you can focus and change your own outcome. Don't let the media mess you up. Just stay focused. And by the way, if you're a real estate pro, please stop looking at other real estate people on TikTok for mortgage and basis point information and reach out to somebody like Matt so that you know what you're talking about. And that's just my loving advice to y'all today. Matt, thank you so much for coming on the show. I really appreciate your expertise and your willingness to share.
Thanks, Leigh.
All right, guys, say something nice in the comments. Make sure you hit the bell to subscribe and circle back next time, and we'll see you for more crazy shit.
As always, I'm so super thrilled that you joined in for more crazy shit. And if you're a realtor, investor, inspector, lender, or just a regular human being who happens to have an unbelievable story that you need to tell the world about, or frankly, you just need to one-up the story you just heard, then make sure to DM me on Instagram at Leigh Thomas Brown, or tweet me at Leigh Brown, or frankly, any social network where you hang out. I'm there. And if you had some fun, then you totally want to subscribe so you don't miss out on any future episodes.